Good evening, guys. Currently, you can see market is around uh, 7, and let's look into Nifty 50 as well as Bank Nifty trade analysis. First, let's look into Bank Nifty trade analysis. As you can see, yesterday the market rallied upwards and clearly signifying some kind of bullish momentum. And in case if the market sentiment would have been bullish, you can see this kind of consolidation after this impulsive momentum towards the upside. In case if the market sentiment would have been bullish, the market would have gapped up, took support here, and continued further towards the upside. But you can see here, during the first half of the day, the market actually gapped down below this 200 moving average and trapped all those buyers who might have sold here with this impulsive momentum towards the upside. And you can see that you can expect further momentum towards the upside as the price consolidated here, took support from this 5-minute zone as well as the made of the 5-minute candle, made of the first candle, and it continued towards the upside, but it faced rejection over here, which clearly signifies bearishness. You can see that when price rejects from this 200 moving average, the high chance the market would continue towards the downside. But you can see the market clearly broke this low here and again retraced, took support from this pivot VWAP level and again rallied here. And in case if you find that the price might have taken support here with this momentum, the market could have easily broken this, should have easily broken this 200 moving average towards the upside. But you can see after this impulsive momentum, you can see this bearish candle over here, which clearly signifies bearishness, guys. And this is an engulfing pattern, or you can call it as piercing pattern as well. And with this candle, the clear market clearly changes the market sentiment from bullish to bearish by breaking this structure towards the downside. You can consider the last up move, which actually broke structure towards the downside here. And if you try to plot the fib extension, fib levels, the common point between this to the common point between this, if you consider this swing to this swing high, you can see the market couldn't even cross this 0.3 level here. This is a 0.38 level. Or if you consider this swing, the common point between this to the common point between this, you can see the market couldn't even cross the 50 level, as both you can consider this swing or this swing also. Better to consider the whole swing, guys, because this whole swing actually broke the structure towards the downside. And you can see the market rejected price from this 0.38 level. And if you try to plot the fib extension levels here, the common point between this to the common point between this to the common point between this, you can see uh, the common point between this. You can see clearly the market came all the way to 1.68 level. You can see the market almost came to this level. You could have exited almost at this zone, guys, clearly targeting a good decent amount of profit. You could have entered short position here, keeping your stop loss just above that 200 VWAP level, and you could have targeted all the way. This was one beautiful trade setup which you could have taken. I actually taken this trade here itself, guys, after this bullish momentum, seeing this candle and this dodgy candle over here, rejection of price from this 200 moving average, as well as the the 21 moving average as well as the 9 moving average. I took the trade here itself, but you can see for maintaining good risk to reward ratio, I think it's better that you take positions like this. And you can see how beautifully the market came all the way to 1.68 level, and the market consolidated for a while. And and here you can see the market clearly broke structure towards the upside, clearly signifying chalk over here. And if you try to plot the fib levels, the common, you can consider this swing here, the common point between this to the common point between this. You can see the market came all the way here, took support from this 50 level. This is the 50 and head higher. You can even see the market even broke this high as well, clearly indicating bullishness. So if you try to plot fib extension levels, the common point between this to the common point between this to the common point between this, you can see the market came all the way to 2.68 level. And here you see price rejected over here and continued further towards the downside. You can see how beautifully the market has performed here. You could have taken after this bullish piercing candle breaking moving averages, the 9 and 21 towards upside. You could have entered somewhere here, keeping your stop loss just below that candle and targeting all the way to 2.68 level. You can see this was one beautiful trade setup, guys. And if you consider this swing structure, this low to this high, guys, and you can see here the market came all the way here and took support from this 50 level. This is the 50. The price took support here, and can see here the market clearly broke structure towards the downside here. You can consider this to be a chalk. And if you see this swing momentum, guys, the high to the low here, you can see the market faced rejection from this level here. This is the 50 level here. Price facing some sort of rejection here and continuing towards the downside. And you could have taken short position here itself when price faced some sort of rejection, or when the market here broke towards the downside with fair value gap, you could have entered here also. The common point between this swing point between this to the this low here, you can see the price here faced rejection from this 50 level here and continued towards the downside. This is the 550 here where price faced some sort of rejection. The common point between this to the common point between this to the common point between this, you could have targeted all the way to 1.6 level. You can see, guys, how the price action here has been respected. Or if you could have entered short position here, you could have taken this swing high to this swing low to this swing high, and you could have targeted all the way somewhere here around this level, 2.68 level, or you could have targeted the 1.68 level as well, or as long as the moving averages, price is trading below moving averages. But this was very good setup, guys. And she taking short position here, as you can see here, there was fair value gap also here. The market came, filled that fair value gap, and tried to head lower. You could have just kept your stop loss just above that 550 level and targeted all the way to this swing as well. And this was one good setup. And you can see the price here trying to rally upwards, but was with no good momentum, guys. You can see there is some sort of fair value gap here where price clearly broke structure towards the upside. You can see here where the market clearly showed some bullish sentiment, break of structure. And here you can see the market came here. This is the fair value gap. And you can see here the market, you can consider this bullish momentum, the common point, the high between this. You can consider this swing also, or the low between this to the low between this to the low between this. The swing structures, you could have targeted the 100% move here. And this is the 100% move, where you could have taken another long position here, keeping your stop loss just below that order block level here and targeting all the way to 100% move. This was one beautiful trade setup, guys, which follows price action. And you can see when this has been broken down towards the downside, you can see here this trendline liquidity has been broken towards the downside, clearly signifying bearishness. And you can see here another chalk formation. So when you consider this swing high to this swing low, you can see price rejection from this 200 moving average as well as 550 level. Or you can consider even this also. It might be the common point here, the common point between this to the common point between this. You can see clearly price rejecting from 0.38 level as well. You can consider anything, guys. You can consider this swing as well. But it's better to consider this because this whole swing which actually broke this low. And you can see here that here the market couldn't even cross the 0.38 level, clearly indicating bearishness. And price even faced rejection from this 21 moving average as well as 200 moving average. And if you try to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this, you can target all the way to 100% move. But here the market didn't reach all the way here. So if you try to see in case if this swing actually works out, you can see here, guys, when you consider this swing here, the common point between this to the common point between this, you can see the market came all the way to 1.68 level here. It's based on your risk to reward ratio, guys. You can say it however you want. And if you consider this short position, keeping your stop loss just above that rejection candle over here and targeting all the way to 1.68 level, this was one good trade setup. And this was an order block where the market clearly showed some kind of, this order block has been mitigated, guys. You can see here, this was a 1 minute order block which broke structure towards the downside. And we can consider this to be an order block as well. This to be a 1 minute order block as well. But here you can see the market clearly broke towards the upside, showing some sort of bullish momentum. Here is where the manipulation has happened, guys. Till here, we can consider the market to be bearish only, with market showing clear signs of bearishness and retracing a rejection of price from the day VWAP level and continuing further to upside inside. But here is where a lot of trap has happened. The sentiment from bullish to bearish totally happened here itself, guys. You can see even after this bearish candle also, you can see the price trying to take support from this zone over here, this 50 level here. I think this zone is sort of a demand zone where you can see even after this price rejection, price trying to head lower, the price holded and continued further towards the upside. This one momentum changed the whole perspective, guys. This one momentum towards the upside changed the whole perspective from bearish to bullish. So this momentum is very important. So let's try to plot these swing structures, the low to the high of this candle. And you can see price trying to take support from this 550 level over here. This is the 550 here. And you can see price trying to consolidate above this day VWAP level as well as the 200 moving average, clearly signifying some sort of bullishness. So if you try to plot the fib extension levels, the swing high to the swing high to the swing high here, we could have targeted all the way to 1.68 level, guys. You can see how here this is the 100% move and this is the 1.68%. This is how you could have easily targeted, guys, or you could have holded as long as the market was staying above here. But you can see here, guys, this was 1.68%. And another target would have been the 100% move here. And you can see here price trying to consolidate above this 5-minute zone as well, above this 200 moving average as well, above this, even this candle as well. Even after you can see this kind of engulfing pattern over here, bullish engulfing pattern, you can see clearly you could have entered long position, keeping a stop loss just above this 200 moving average. Clearly you could have taken a decent amount of profit, or after this bullish momentum also, this consolidation about 9 and as well as 20 moving average, you could have entered long position. But here you can see the last down candle which actually broke structure towards the upside. There is another internal structure over here. This is a break of structure. And if you consider the last down move, you can consider this to be a 1 minute order block. So let's take this out, and this order block has been mitigated. And if you try to plot the fib extinction levels, guys, the common point between this to the common point between this to the common point between this, you could have targeted the 1.68 level, the 100% move, or the 2.68 level as well. You can see how the market, in case if you have considered that swing structure where the market momentum has taken place, you could have entered like this also, guys, targeting the 2.68 level. Instead of this swing, you could have considered this order block, price broke, took support here, and continued further towards the upside. That's how you could have taken your targets, or you could have trade as long as your market is trying to move above the 9 as well as 21 moving average. And after this kind of engulfing pattern over here, you could have exited your long position. So it's based on your risk to reward ratio, guys. It's about how you manage trades. Uh, it's most important. Even if you have a decent amount of knowledge, also it's very difficult if you don't maintain that discipline and maintain a proper risk management. See, this is the 550 level, guys. This is this swing structure over here. This is the 550, and you can see price trying to take support here. Even if there is a lot of fair value gap here, also the market didn't come and take mitigate this zone here, guys. And you can see here also, even after there is a lot of fair value gap here, also the market took support at 550 level. Here also, market took support, and even there is no strong support here, clearly signifying institutional buyers have entered the market here, entered the market here, keeping the stop losses just above here, guys, where you can see when price tries to take support as 550 as the support, definitely institutional buyers and sellers might have entered the market. Even with this fair value gap, even with this fair value, the price try to rally towards the upside, clearly indicating some sort of bullishness. And if you try to plot the fib extinction levels, the common point between this, if you try to plot the common point between this to the common point between this to the common point between this, you can see the market side to go all the way to 100%, but you can expect a bullish momentum, guys. If the market is trying to target this buyer, the high chance the market might come and take support anywhere here, guys. This is if 50 zone, or you can consider here also the high chance the market, or in case if the market sentiment being bullish, the high chance the market might gap up, reach this 100% or 1.68 level as well. This is about Bank Nifty, guys. And if you try to plot this zone here, this is the 200 moving average support over here, and targeting all the way to this 200. This is one beautiful target over here where the market has behaved. That's it, guys. You can see here the market here kind of show this kind of momentum. And now let's coming to Nifty, guys. Nifty 50. In Nifty 50, as I have already mentioned, this is the pivot levels, and this is the green color line is the first candle's fib, and this zone is the 5 minute zone, guys. And Nifty 50 also moved same as Bank Nifty. You can see here the market couldn't cross this 200 moving average as price rejected over here and continued towards the downside. And you can see this price rejection over here. The market came all the way here, found some kind of consolidation, and clearly the market actually broke towards the upside. You can consider this as break off, or you can consider this as chalk here. You can consider this to be chalk. And if you try to plot the fib levels, the common point between this to the common point between this, we can see the market here as the 50 over here. This is a 50. And if you try to plot the fib extension levels, the common point between this to the common point between this to the common point between this, the market came all the way to 1.68 level over here. This is the one point you could have exited this trade, guys. This is, or in confluence with Bank Nifty, you could have taken long position in after seeing this bullish candle and exiting over here as well. This is how you could have taken. And you can see one thing over here, guys. You can see that the market clearly broke structure here, which fair value gaps here. And this is a breakout structure. And if you consider the last up move, you can consider this to be the last up move. Or you can see that after this bearish candle, a lot of sellers might have entered the market, showing this kind of aggressive momentum and expecting clearly the market might break another candles like this and towards the downside. But you can see what happened is that after this break of this candle, you can see that this kind of trendline liquidity over here, their price rejected from this 9 as well as 21 moving average, and there high chance the market would continue towards the downside like this. But this consolidation where the market with this candle, guys, clearly broke towards the upside, breaking this 9 as well as 21 moving average and even forming chalk over here, changed the market sentiment from being bearish to bullish. And this is where the manipulation has happened. A lot of sellers might have expected as the price is trading below the 9 as well as 21 moving average and expecting the market price to go further down. But here you can see how the market here trapped all those sellers. And if you consider this as the 1 minute order block, the last down candle, this is the 1 minute order block, and the price has not come here, but you can see the fair value gap here. This is the fair value gap. The market came here, mitigated, continued further high, came again here and continued further towards the upside. But this 1 minute order block is very important as it clearly broke structure towards the upside here with fair value gaps. This is the break of structure. And the market consolidating above the 9 as well as 21 moving average. This is a very good sign of bullishness, guys. And whenever you find this kind of consolidation, there are high chances the market will continue further towards the upside. And after this bearish candle, like you have seen, after this bearish candle, the price halted and trapped all the sellers who might have sold here, guys. After seeing this candle, a lot of sellers might have entered expecting the market to go further and breaking these lows. But you can see how the market trapped all those sellers here as well. And the market again rallied upwards. Again, after this bullish momentum, also you can see a lot of buyers might have entered the market, but again the market tracked all those buyers and continued further towards the downside. You can see how the market manipulates, guys. And this is the last up candle. You can consider this to be a 1 minute order block, and this order block has been mitigated. So it's order blocks are only for one-time use, guys. And you can see this kind of liquidity also here, where price was taking multiple supports here, and price clearly broke towards the downside. But you can see here the price kind of took support here and continued further towards the upside. But here is where the market totally changed market sentiment, guys. You can see after this bearish candle also the market kind of retest and found some kind of rejection over this 200 moving average as well as the 9 as well as 20 moving average, clearly signifying bearishness as well as a rounding top button, expecting the market to go further downside. But you can see how the market here clearly changed the market sentiment from bearish to bullish, as same as in Nifty 50, as well as in Bank Nifty as well. If you can see here, this is the zone, guys. You can see at around 12:30, And here also at around 12:30 is where the market should change the perspective from bearish to bullish. And you can consider the low here to the high over here. You can see the market kind of came towards the downside here. If you consider the last down candle over here, you can consider this candle, guys. This is the last down candle, which actually broke structure towards the downside, upside. And this you can consider this to be a 1 minute order block, which broke structure here. This is the break of structure, and you can see market came here again, tried to head higher, again took support here and continued further towards the upside. And if you consider the fib extension levels, the common point between this to the common point between this to the common point between this, you can see the market came all the way to 1.6, or you could have targeted the pivot levels, or if you try to plot the fib extensions from here, guys, this zone to this zone to this zone, you can see how the market came all the way here. This is the 1.68 level. You could have targeted that zone and exited your long positions. This is about Nifty 50, guys. You can see here you could have taken after this kind of bullish momentum and targeted all the way to this zone. And with this bearish candle also you could have entered, but in case you could have used Bank Nifty trades, guys, to make proper decisions. And you can see after this bullish momentum, if you try to plot this low to this high, the market was trying to take support from this 0.5 as well as 0.6 zone, 50 level zone. This is the 50 zone, guys. And you can see the market came, took support here and tried to even break this high also, clearly breaking structure towards the upside. Mhm. And this is about Nifty 50 as well as Bank Nifty trade analysis, guys. And for better confluences, we can use anchor VWAPs, guys. In case of anchor VWAPs, you can consider the swing high structure, where you can see the market after breaking high consolidating about this zone, guys. Here you can see this kind of consolidation here, and you could have taken long trade here expecting the target at this high, or the double of this swing also you could have targeted. If you see, guys, if you consider this double, a common point between this two, you can see the market came all the way to that zone. But you could have drawn the fib extinction levels, guys, to better your trade analysis. And this was one beautiful trade setup where you could have taken long position. I think it's better to use Bank Nifty, guys, because here you can see how the market clearly followed price action, and you can trade a lot of trade setups. One, two, three, four, five, six beautiful trade setups, guys, where the price action has been followed perfectly. But in Nifty 50, though, you can't expect a good price action. As you can see, the market here is trying to show a lot of manipulation over here. So it's better to trade in Bank Nifty only. In confluence with Nifty, you can take positions in Nifty 50. This is about my trade analysis, guys. Uh, in case if you want to see in anchor VWAP levels over here, you can see the price, this swing high price doing taking support here. You can see here, guys, this 200 moving average as well as anchor VWAP support of this or this swing. We could have taken a very good trade here, guys, expecting the market to go higher. And if you consider even this low also, you can expect this consolidation itself. You can see here the market trying to head higher only. This is about Bank Nifty and Nifty 50 trade analysis, guys. I hope what I'm teaching you is helping you. In case if you find my videos helpful, guys, please leave a comment below. And if you want to share any suggestions here, you can definitely comment so I can read what you mean. Mm, Thank you, guys.